What's up, everybody? Welcome to another edition of Zach's Live Trader. Here with you, as always, the people's champ of Wall Street, the bearded boy wonder, Dave Bartosiak. And today, my friends, I'm feeling rather festive. I got the Mexican ranchero music in the background right now. No reason why. I just, it's trying to feel good. It's not Taco Tuesday. It's not Pizza Thursday. I know it's Wednesday. Whatever. We're just switching it up. I like to switch up styles on you guys every once in a while. So I'm hoping that everything looks okay. I'm running this off my mobile hotspot. So shout out to T-Mobile for bringing the mobile hotspot with enough bandwidth to stream wirelessly via the hotspot connection on my laptop. This is fantastic. What's up, PJ, Bruno, Trevor, Kurt? The gang's all here. Earnings season kicking off, of course. Lots of stuff happening. I'm going to be more intimately involved with earnings season than I ever have in my life because now I'm running Surprise Trader too. So I'm pretty sure some of those Surprise Trader folks are going to end up trickling on in here. It's only natural, right? What's up, Dave? How you doing, man? Thank you again, my friend. Yeah, hotspot's great. It's great. So guys, if I like I said, this is kind of experimental. So if we have a problem with the stream, if it gets kind of bogus, if it goes down, just let me know. All right, just throw it in there. And I know sometimes some one or two people will have a problem, but if it's like a big problem, then I'll change it. I also got the Pandora going, so I mean there's a lot going back and forth right now, so I can always shut that down, I guess. But everything looks good. But 2700 KB coming, no 3200 KB there. So as long as we're above 25, we're gonna be okay. We're gonna be okay, but we'll see. I mean, we're gonna try. Whatever. We'll just do. Oh, you did? A while back, the guy running it bust your chops? Haha. Who was it? I'm just curious. Was it what's his name? Was it Todd? It couldn't have been Todd. Todd wouldn't have busted your chops. Dutram doesn't bust too many chops either. You know what? It might have been Jared or something like that, like way back in the day. I don't know. We'll see. Yeah, so you guys might be getting some lag here. Just let me know. It's coming. We're gonna do our best here. You know what I'll do? If I'm starting to see this a little too much, got a bit choppy. Okay, this is what I'm gonna do. I'm shutting down the music. Okay, so then maybe that'll free up some bandwidth here. So we'll see. So this is going to be our best. It says my streamer's coming in. Okay, so all right, let's go. I'm just gonna pound through this, guys. If it looks bad, sorry. At least you might be able to hear me, so that's good, right? I'm just gonna go ahead and get into this. So we're talking PayPal here, and I like PayPal. Quick little service announcement, I guess. So Live Trader. That's right. I get to draw on my screen at Zachs.com. If you're not already hooked up on my distribution list, make sure you connect Live Trader at Zachs.com. Shoot me those emails, and I'll make sure you're on the distribution list so you know when I'm doing these things, okay? All right, so PayPal. Now, let's kick things off like we always do with this price consensus EPS surprise chart here on Zachs.com. The black line corresponds with the right y-axis, which is price. The green arrows are earnings beats. There are no red arrows. There haven't been any earnings misses. Remember, PayPal spun off from eBay. The multicolored lines represent the evolution of our Zacks consensus estimates over time correspond to the left y-axis. Jumping off at the page, guys, you should notice something, and that something is growth in EPS year over year, as well as an overall positive slope to these EPS estimates. And that, my friends, is why there's been a meteoric rise. I mean, it's partially why there's been a meteoric rise. There's other things too, but look at that, how these EPS estimates have gone up pretty good, and now we're in the twos. So when you're looking at these stocks, and this is a conversation people are going to have a lot over the course of the next quarter, the overvalued conversation. Are these things overvalued? Now, if you notice, guys, I've started digging into the ZRS and showing you historical valuations on these, which I think is great to look at because that helps put it in perspective. So when you're asking yourself, are we overvalued, are we not? A couple of valuation metrics you can look at. Obviously, we do PE, we do price to sales, financials, price to book, whatever you want to do. But we're going to dig in that a little bit later. But when you see these moves in EPS, 1.6 to 2.4 is 50%, right? It's a 50% increase in EPS estimates. We're not quite at 2.4, but I'm just, telling you here. So you got to put that in perspective, okay? So you can't just look at a stock and see that it's gone up and go, oh, it's overvalued. No, I mean, you can't. You got to dig in a little bit. It's not quite so easy. So overall, price consensus EPS chart on this. We have limited history since the spinoff just happened in July 2015. Or August, I think it was July, right? Yeah, July 2015. So hasn't been around for a very long time, but this is beautiful. This is exactly the sort of thing that you want to see out of a price consensus and EPS surprise chart. So A+ as far as that is concerned. Let's look at the detailed estimates page, see what we can see. Zacks ranked #1 strong buy right now. They're going to report after the bell mañana, so you got the rest of the trading day today, all of tomorrow to make your trading decision. Look at the revenue growth here. This is pretty significant. Almost 19% for the current quarter, 19.7% for next quarter. Current year looks like 1862. Next year, 1819. Translate that over to EPS, solid there too, 24.6, 22.2, 22.7, 20. I mean, just fantastic numbers here, guys. Fantastic numbers for PayPal. Huge growth. What is fueling this growth? I just wrote a big report on Square about how, there's a fintech revolution taking place and mobile payments, and it's all about this disintermediation, where you're taking these sort of traditional large financial firms that have, I don't want to say they've put up the barriers to entry because they really haven't, obviously they haven't put up the barrier, but they're so fixated on making money on the large scale that these smaller type deals, they're just not interested in them. So Square and PayPal can come in and they can target the small intermediate businesses in the U.S. and offer them a payment processing platform that is going to be inexpensive, it's going to be easy to use, that comes with an entire sort of e-commerce suite. I was at Copper Chimney here in Sunny Isles Beach, and I paid my bill, and a little PayPal reader came, and I had to push the chip in and could do the PayPal reader thing. And of course, you've seen Square pretty much everywhere, but that's really where a lot of the growth is for these guys. And then Square specifically, they have Square Capital, so they're going to do some lending. I don't know that PayPal's really getting into that lending side of things. I think they partner up with, is it a firm? They don't partner up with a firm. I can't remember who PayPal partners up with for their PayPal credit. Used to be like Synchrony Bank. I don't know if it's the same, but so it's a little bit different than Square's lending side of things, where I think PayPal's more commercial, but I mean more consumer lending versus business lending. But we'll see. Anyway you slice it, over the course of the last 60 days, you do have 3 analysts increasing their estimate and 3 decreasing for the current quarter. Look at next quarter. You had some real bearishness for next quarter, but that was 60 days ago. And if you look recently, just in the last week, You have one analyst increasing their number for the current year, one for next year. I always find this funny, okay? So you have, over the last week, one analyst has increased their current year estimates, right? The current year, which in this case is going to close out December of 2017. Okay, you're following me? All right. But that same analyst failed to increase their quarterly estimate for the current quarter or the next quarter. So how is the current year number going to go up if the second half is already in and you didn't raise? What? Anyway, doesn't make a lot of sense, right? But that's okay. Let's look at the net effect to our Zach's consensus estimate here. You'll see current quarter trends gone from 42 to 44. Next quarter from 50 cents to 51. Current year from $1.78 to $1.84. 213 to 221. All going in a positive direction, and really a good chunk of the reason why PayPal's Zach's rank number one right now. PayPal should just buy Square to stay competitive, perhaps. You know, I was thinking about that. If you're Jack Dorsey, which is the head honcho of Square, right? One of the founders of Square, Dorsey of Twitter fame. Now, Twitter hasn't been bought out. So I think maybe Dorsey's one of those guys who just refuses to be bought out, right? Now, Square, I mean, the Square is a different thing. But PayPal overall, man, this is a growth business, not just in the U.S., but internationally. This is a big deal. This is all going to end up. I have sort of a Ray Kurzweil, I think that's how you say his name, right? Futurist kind of theory on the PayPals and the Squares of the world, as eventually they integrate with Bitcoin and then become a more trusted sort of Bitcoin service. But we're not going to go there right now. Recent surprise, got a decent surprise last quarter before that, and then we got nothing. So a couple of quarters of nothing, a couple of quarters of surprise. King of the Galaxy, how you doing? The whole Galaxy, really? Or is it like the Galaxy, like the Samsung Galaxies? Are you just good on your phone? I don't know. Clever name nonetheless, my friend. All right. You know, I didn't even get this prepared. Slipping. Didn't even get the PayPal up there. So as always, guys, we just do the options quotes on bar chart and give us a broad, sort of some broad strokes. I'm gonna let that load up. Here I'm gonna go back. Good news is we can compare Square and PayPal on a lot of these valuation metrics, these growth metrics. Now, I think the growth is a little bit stronger. Okay. Let's look at this. Revenue growth, 15, 17, 18, 18. Those are solid revenue growth numbers. Let's go to digging the charts. Digging in the charts. Forward PEs. How far back can we go? This is as far back I can go. So you're not going to hear too much about this. Look at this. Definitely some multiple expansion here. Right now, PayPal at 49 times sort of future earnings. Where's my Square? Oh, yeah, that's right. Square's not making any money right now. So it's kind of hard to put Square on it when the E in your PE is negative. So at least these guys are making money. What other metrics can we use to compare the two of these? Should we do book because they're a financial, technically? Let's just see how that looks. PayPal in a much better position than Square. Although, again, this is like card processing, so maybe you can look at the credit cards. We can throw that up here too. But what you want to do is throw a few of these out there, right? And just kind of see what's shaking. Go back to the sales. This might be, the two of these might be closer on this. Ah, yes, there it is. Okay, now here you see price to sales, PayPal at 527, Square at 453. So this is where the metrics are starting to get a little bit more in line, but you still have a little bit of expansion with the high of this year being 689, higher than it's been in the past in terms of price to sales. I can also pull up, just for giggles, guys, I know a few of you in the chat room were talking AXP. Obviously, more established AXP. Kurt, we're right here, buddy. We're right here. We're just talking about it. It's like you looked into the future and you knew I was going to talk AXP. So 2.32 is the price to sales there on American Express. 5.27. Again, guys, little different sort of business. I know. I get it. We're not comparing apples to apples here. And here we go, Square. And these are where these awesome theories do come in, Wild Bill. You know, one of these more traditional companies, the Visas of the world, the American Expresses of the world, the MasterCards, right? These guys should come in here and make a play for something like this. And this is why. Let's look at, we're going to go back to the revenue, okay? And how come I can't get revenue forecasts? Can I get that in here? Wait, hang on. Let me see, guys. History. Let me see if I can get this. Sorry, I know. Revenue. I can get revenue. Can I get revenue growth? If I get revenue growth. Wait for it. Wait for it, guys. Maybe I got it. Maybe I. Maybe I don't. Okay, that's all right. Man, we'll just have to do this the old school way. Darn it. Okay, so let's look at this. So we got boom, boom, boom. What is this? Average revenue growth? Current revenue growth? What is, I wish I knew what CR in these were, what these meant. Anyway, so PayPal, 16, 18% growth here, right? Now we're going to pull up Square. 34.8, 27.25, 27.5, right? And now let's go to the more traditional guys. Now look at Visa and where their revenue growth is. They're still going to have revenue growth. 20%, 9%, 10%, right? So yes, less. AXP. Shrinking 2017, and then you get growth there, right? What am I thinking? MA, right? 14%, 12%. So still really solid numbers here, but they would certainly benefit from a little bit more of this love, right? The 18s, and then Square in the 20s, right? So Square getting a little bit more aggressive. You know, you got to think about it. PayPal is more established too, right? If we're looking at just the actual revenue numbers, not the revenue growth, there's 12 billion, 15 billion for PayPal, whereas only 2 billion, 2.7 billion for Square, right? So you're talking a company that's much larger already, 6 times as big, 5 times as big. So that's kind of why, right? This revenue growth, not quite as much. And then, so then could you make the same argument on the Visas and the PayPal in the world? I don't know. I still agree it would be good if one of them bought one of these guys out. I think that'd be a great idea. All right. So this is all well and good, right? But what do we really want to know? We want to know what the surprise activity has been here. What's going on here? While Bill's pointing out that PayPal's moved less than $1 after the last earnings report. So, to clarify for you here, Wild Bill, this little earnings surprise thing that I get here that I always show you guys, we got to wait while the data is being populated though, is 2 days prior to earnings and then 2 days after earnings. So that 4-day period is what you get here. So this number is going to be a little bit different than yours, okay? But in the same spirit and pretty darned close. Last quarter, really a whole lot of nada. Last time you had a dramatic move was the September quarter, which is what we're going to be doing here. Okay, so a year ago, you got a 9% move. I mean, a 5% move is pretty good, but 9% is even better. And then going back, shortly after its IPO, had a 7% move. So not too many dramatic moves out of PayPal. Let's go ahead and dig into the technical chart. Oh my goodness! I mean, what am I can't even. What am I supposed to say? It's going up. I mean, holy smokes, guys. I'm going to throw in another indicator here. This is the last time it gapped. I like to use the money flows, but the money flows get thrown off by gaps. So you got to kind of go 21 days past that, and then normals out, and then, okay, this is where we are. So one thing I like to look for is stock breaking down or CMF breaking down while the stock is going up, right? Now, it's important to note the money flows have not crossed under the zero line, so it's still net positive money flows. But there is bearish divergence between the two of them. Famously, I called out bearish divergence on an Amazon ahead of earnings, and it just ran directly into my face. It just ran straight up. So I was off on that one. But the divergence was still there, so I'm not worried. But I like to look at this just in case there's any glaring. I don't even know what DKK is, so I can't explain anything about what's wrong with PayPal and DKK. Or this currency of a foreign land, perhaps. But I still couldn't tell you. Still couldn't tell you. Okay. So what do we got here? Still a stock. I mean, the commodity channel index hasn't even been oversold since what? Mid-August on a little blip. That stayed positive. One of my favorite continuation patterns, I use it in Momentum Trader all the time, is when the commodity channel index goes from overbought, so like basically over 100, and comes down to touch the zero line. And then I buy. When the stock's at highs, too. People think I'm a madman, but hey, it works. So look at this. Overbought, came back by the zero line, and boom. And this will happen from time to time when a stock's really running. Now, we don't even have that here, though. So essentially, we're getting from this is, things are moving in a positive direction. And it even looks like if I threw up a MACD here, I bet you it would look toppy, but it's not rolling over. How much you guys want to bet? Toppy but not rolling over? Toppy but not rolling over? Again, toppy, not rolling over. Okay. It's just very positive, and it's very over. I mean, is it overbought? Yeah, guys, it's overbought. Does that mean it's going to stop being overbought? No, it doesn't mean it's going to stop being overbought. So these are those tough charts where I'm trying to find areas of potential support on the downside or resistance to the upside, and I got nothing, because you got the $70 level there. We might be able to get in here. Let's do this. I'm going to zoom in because somebody asked me to draw fibs, right? So my best bet as a fib here, now this is using freestockcharts.com, guys. So you go over here, in their draw tools. Now most charting packages are going to have this. So wherever you're at, whatever you're using, I just use the free stock charts because I know all you guys can use it for free. The other program, NinjaTrader, we've used that, but I don't have live data on that because I don't know. I just don't. I have live data in so many other places. I don't want to necessarily pay $250 a month for live data because I'm technically a professional, right? When I have it everywhere else for free. In the live, you can get end of the day data for free from them. Anyway, fib retracement. So typically I'll look for, the last pullback where that stalled out, the last dramatic pullback, sort of these swing lows, but, more significant than a swing low even. Just like a turning point that I feel. So it's very subjective. But if I drew that, I just kind of hold it. Arbitrary low, arbitrary high. Jeff, you're banned from trading. I just want you to, you need to relax, sit back, enjoy the show. Don't worry about trading so much. Just messing with you, man. Anyway, so random low, arbitrary high, right? And you draw your fibs. And this gives you potential areas of resistance on a pullback, and then support on a pullback rather, and then resistance on the upside, okay? So in this case, you could argue 50% retracement at 66 might provide some support. But again, guys, this is not a major fib. This is like a small fib, right? So the smaller the fib, the less significant it is, because the fewer people are going to recognize it and trade it. But you get the 65 sort of 20 area. That might be the next stop, because look at this. It's also where the top was here. So that could be good. Oh, options house. Well, yell at them. I'm so glad, by the way. Totally got arbitrary here. I know. But so I switched it so I can't, so you don't see the ads. And this one is so funny that you got to see it. It says men 50 plus need to see this new bedroom fire starter. And I'm pretty sure that's a chick sitting Indian style with her shoes off and an empty glass of champagne. And I don't know what is in her hand. Maybe it's her other shoe. And she's looking up. I think she's disappointed in the hallway of a hotel. Best I could tell. So, all right. That's the kind of stuff that's been popping up lately. I don't know what that says about my searching habits, but that's why I've moved this stuff off the screen, which is good. You can do that when you have multiple screens. Also a good thing. All right. So anyway, getting off topic here. The other thing that jumped out at me with regards to this fib was that, I'm all about this volume at price, right? All with the volume at price indicator. And right near that 50 fib, you do have some support that has been coming out. And then of course this high. So I think really that's the area. And then further down here, 63. But that's a long way away, right? This is the 50-day moving average. The last time that PayPal traded down at the 50-day moving average was April. April, my friends. April. Okay. Now, let's look at the bar chart, see what we got going on. So they're going to report mañana. Change it from the stacked view to the side-by-side. Trading 67s, 67.18. We call it 67s. And what do you got? 167 by 173. We'll say $1.70. And then a 138 by 140. We call that 139. They're looking for a $3 move. A little bit of $3 chuck at the 67. That's 4.6%. So a $3 holler essentially. That's easy to game out. 64s and 70. Okay. Let's get back to the chart. What does 64 and 70 look like? So 64 is in no man's land. Okay. And 70 is just outside the high, right? Outside the high. Yeah, 69, 61. 70 is just outside the high. All right. That's right. I'm clicking a pen. I gotta stop clicking a pen. All this random noise. I don't have the ranchero music to drown it out for me. Now, as much as we love doing this, and we will. Hey guys, here's the good news. There's definitely going to be a lotto on this. Definitely a lotto on this one. November. Forget you side by side. I want it stacked. Here's what we're going to be able to do. A lot of things. Now, I've been a risk-adverse, careful guy the last several options trades that I've given you. I've been doing out-of-the-money short put spreads, things like that. Out-of-the-money short spreads, things like, you know. We're going to do it differently today. We're going long and strong, baby. That's what I'm talking about. Maybe it's the ads that got me in the mood, but this is what we're going to look at. Long, November 17th, 67.50. That's a 220. Simultaneously selling to open the $70 call. You're going to get back $1.20. So that's a $100 holler at risk. This is gorgeous because the difference in the strike prices is $250 minus that dollar means $150 is your upside potential. You can make 150% on this trade, and all you need is shares of PayPal to close at or above $70 at expiration November 17th. I like it. Bull call. Long. November 17th. 67.50. 70 call spread for the $1 holler. Bull debit. Bull debit. Boom. Bulls. Now what should the Bears do? Bears? Like most things in this market, I'm going to tell you Bears to get more aggressive. Because if it goes bad, it's going to go, it'll be terrible, I think. I think it'll push down every bit. We said 64. I think it gets all the way down to the 50-day moving average. You know, why wouldn't it retrace to the moving average on a bad report? So I think the Bulls the Bears rather, should consider going long the 67.50 put for 230, simultaneously selling the 62.50 put for 65 cents. You would have 165 at risk here. Come on, bar chart. 165. I'm going to go ahead and line this up again for you. Sorry about that. There it is. Boom and boom. So you got 165 at risk. The difference in the strike prices here is $5. Minus that 165 is $335 on that $1.65. This is a triple up trade for the Bears. What they would need to see is PayPal get all the way down to $62.50 at expiration, and they would triple up on their money. So I'm going to say the Bear debit is long on November 17th, 67.50, 62.50 put spread for $1.65 net debit. Bulls, Bears. What's the bear case here? I mean, how does that happen? The growth isn't there. Something's slowing, right? They make some kind of, I don't know. Where's the bear case here? The actual factual bear case. Other than the obvious. I mean, do we have any events out there that we can point to and say, oh yeah, no, that's the bear case? Competition just getting too big. Square taking more market share, something like that. I don't think so. So these guys came out, you know, PayPal's got their Venmo, right? Venmo's PayPal. That's that peer-to-peer sort of payment thing, and I think they do merchant processing with Venmo too. So I think there's plenty of space for these guys, for all these guys, and they're not going to start bumping into each other yet. So I think they're both going to be. I think they're both going to be all right. All right, lottos. Dave doesn't have a bad idea. let me trade that pays, guys. Right here. Bull, debit, long. That's what I think. Trade that pays. Trade that pays is the bull debit. But again, bears will be rewarded. Yeah, that's what I said. Didn't I say that? I just thought I just said that. Did I say that? I meant to say it if I didn't say it. Yeah, Venmo is PayPal, and they're growing. I know I speak in quarter sentences sometimes, guys. Venmo's PayPal's unit that's going head to head with Square, right? For payment processing and such. Okay. So I think the lottos are still on the bullish side. Wild Bill pointed out, PayPal hasn't moved much, right? So assume it does move, right? It breaks out a little bit. There's no stopping it up here. 70s is where the top end of this is. What was the biggest move I saw? It was 7%, right? Wasn't that what it was? I think it was. Let's call it 7%. Let's say it moves 7%. So 67.17, and it moves 7%. That's 71s, almost 72. So while that 70 call may be a good thing, that may be the way to go, right? I like the 69 for 85. I know we want to keep these a little tighter, right? 75, or the 69 for 85, I mean. 57 on that. One of these. What the heck. I'll give it my blessing, Dave. Let's call a lotto. Lotto is the 70 call. And this is the front. This is October 20th for 57 cents. Basically under 60 cents, I think you can get it. I kind of like the 69 as sort of a higher risk kind of thing. If it does go to 70, you'll be in the green there. I get this question all the time. How about just going out? So this is like we take the lotto strike, but then we go out to the actual expiration and give it some love. The 70s for $1.50. I got $1.20 here. If it's $1.15, it's $1.15. This is fine too, guys. This is fine. You know, the only reason why I put together these put spreads, I mean these call spreads, whatever, all spreads, is because while you're buying time value, you're in the long call, you're also selling time value in the short call. So you're being rewarded, or at least you're not being penalized for going out further. So that's why I like to use the spreads, okay? Now, going out here and getting a 70 call out to November, what you're going to see is, depends on what happens, the implied volatility is going to shrink a little bit after earnings, right? Because this is the main event. So, you know, I've seen scenarios where the thing comes in, it beats, it creeps up, and those 70 calls lose money, okay? But you have more flexibility, you have more time, this is a good thing. Now here, I want to give you one more sort of caveat to this also, guys. If you're bullish on a stock like this, over the long haul, and you don't want to pay $6,700 for 100 shares, you can go in the money on a leap. Now, I'm going to need to do a whole sort of session on this, like what's a leap, right? Basically just a very long-dated option. So this is a 2019, a January 2019 call option at $50, which is going to cost $20.80. So instead of paying $6,700 to control 100 shares of this stock out to 2018, it's only going to cost you 20 G's. I mean, 20, not 20 G's. 2 G's. 2 G's, okay? So then you can gain exposure to a stock like this without tying up a ton of your account. And you have flexibility down the line. So if you're bullish on a stock like this over the long term, that is a way to play it. You could also use leaps and do, you could do spreads with leaps too, where you buy the 65, and then you can, you know, sell the 80. You give yourself lots of upside potential still. But now you're only going to pay $5 for 65. That's still about $70 anyway, right? So I think you do this. Now you've got basically unlimited upside potential. This is for those longer term ideas. For, again, guys, if this is a stock that you like over the long term, and this is what this price consensus and EPS surprise chart is for. It's for you to fall in love with a stock over the long term. And you can, there's still liquid, so you can buy and sell it just like a stock. You can get out of it whenever you need to. You're just committing less money than ponying up, you know, $6,700. And the other thing too, I know you guys, some of you guys buy on margin. You're not going to get a margin call on this either, right? Because it's a call option, so it's not marginable anyway. So you're never going to worry about a margin call, and it's less money than actually buying anything on margin. So you can lever up over the long run if you like the stock long term. Okay? So there you go. There's my video for the day. Now, I'm telling you, if this AT&T modem isn't downstairs by the end of the day, but this is the thing though, because this building is so terrible anyway, it could already have been here, and the guys just don't know because the packing system here is incredible. The guys checking in the packages, there's one guy, and he's got both, you know, all 3 buildings or whatever. He's just in over his head, and sometimes packages come in and they totally forget about them, and then it takes a day or two. So, but I don't have a day or two. Like, we're out of here. Friday, that's it. We're out. It's already Wednesday. So it better be here tomorrow or today or whatever. Otherwise, it's going to be a problem. So either way, I think it worked off the phone, right? No complaints. I guess a few complaints, but we hung it out. We stuck it out, guys, and it looks like it was okay. So mañana, we're definitely going to do whatever I said we were going to do tomorrow. Pet Meds Express. I know it's a little bit of a head scratcher, guys. I know a lot of you are like, wait, what? It's a good thing. I had it in home run. Boland's followed it a little bit too. I like it. It doesn't have a lot of strikes on it. It doesn't have a ton of options interest, open interest. That's benefited us in the past because it's been good. Yeah, man, I'm streaming off the phone, Jeff. I'm telling you, unbelievable. Either way, it worked. So that's all I got, guys. So I will see you tomorrow, 1 o'clock Central, for Pet Meds Express, and we'll go from there. So now that I know the hotspot's good, I could have been doing this at the beach the whole time. Unbelievable. I'm gonna move far away from the beach, so it's no good. Anyway, all right, everybody. So again, if you're not already hooked up on Live Trader with the distribution email list, I know you guys all are, but man, livetrader@zax.com. Send me those emails. You get on the list. I think I'm going to change this little thing down here. This bad boy. I got to change this so it says Live Trader, blah, 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 so people can send it there. Change my little call to action. But that's all I got for you here, guys. Today I'm starting to lose my voice, screaming at the Cubs in terror. I'm sure they'll be eliminated tonight, so I'll be a little bit depressed tomorrow. But that's okay. I'll get over it, and then we got to move. So I will see you all in the chat room later today and, of course, tomorrow. Have a great one, guys. Thanks a lot for coming out.